Market news now. The JSE is on track to reach a new record, strengthening along with its global peers, with the rand firmer in line with the emerging market currencies as investors digest U.S. consumer inflation data, which came in as expected. The CPI figures overall show things seem to be going in the right direction, paving the way for the Fed to downshift to a quarter-point hike in its next meeting. Some U.S. officials have signaled openness to making a 25 basis point rate increase at their next meeting, while also stressing that the Fed still has more work to do to tame prices and not anticipating any rate cuts this year. Meanwhile, for investors with 2020 still fresh in their minds, there's been no shortage of market drama in 2022, from global growth slowing sharply on a diminishing reopening boost, fiscal and monetary tightening, China's ongoing COVID restrictions and the property slump, and the energy supply shock resulting from the Russia-Ukraine war. I spoke to Reza Hendrickse, who's a portfolio manager from PPS Investments, about the current investment climate.
We are essentially entering a period, or at least we are now, and have been in a period that has been highly uncertain. It's been one full of surprises, but it really comes with the territory. One is always, whichever year one enters, it does tend to sort of throw at you lots of surprises, lots of things out there that one has to deal with. So this year, last year was no different to any other prior year, in which there are known certainties, there's known uncertainties, there are unknown uncertainties, and it's really those unknown uncertainties, those things that you aren't really thinking of, that tend to come at you from out of the blue. Those are the ones that tend to have the biggest impact on both markets, as well as when it comes to managing money.
The one thing that, speaking to many portfolio managers and analysts, some of the key themes that came out for them was inflation was a big topic, interest rate hikes was another one. As we start off 2023, what are the key risks for you that you are keeping an eye on?
So one of the big things that are on investors' minds at the moment, I think, are just considering the growth slowdown that we are seeing globally. It really comes down to how severe is that continued slowdown in global growth going to be. Many people are worried about the potential for a global recession. And so I would say that is perhaps one of the big things that are one of the key themes heading into this year is, are we in fact heading into a recession? And if we are, how severe might that recession be, and how should one react to that?
Speaking of that, then, when you look at the opportunities, whether it's South African equities or US or perhaps even China, now that we're talking about a China reopen and what that means for different sectors like the tech sector, where are you seeing opportunities right now as PPS?
So PPS is a multi-manager, and so we invest from that perspective. But if we were to look globally, firstly, I think you're absolutely right. There are opportunities out there. Although there are risks, there are also opportunities. From a valuation perspective, firstly, I think that there are parts of the market that are more expensive than others. For example, US equities, the US market does still seem to be more expensive than the rest of the world. So one would need to look elsewhere if you are looking for sort of cheaper assets. South Africa is potentially one of those areas, as well as other emerging markets, where there is still some value to be found in the equity market as well as bond market. But also other areas like sort of Europe. You're right, China is facing a reopening at the moment. There's been a bit of a revival of risk appetite on that front. But over the years, there's been this big rotation, this big kind of favoring of developed market equities, and it's really done well compared to emerging markets. And maybe we are entering a period where emerging markets could do better going forward.
On the question of China, I mean, I'm sure you've read many headlines, surrounding this reopen, what the effect is on commodities and what kind of pickup we could see in the coming months. What's the main big question you're asking yourself as you read these, headlines coming through from different parts of the financial media?
So there has been quite a lot of skepticism, quite a lot of negativity, and a lot of worry and concern around China. As you rightly mentioned, the economy has been in a state of sort of restrictions, have been abound. They've been in COVID lockdowns for the past couple of years, and so their economy really has been on a stop-start path, as opposed to the rest of the world that has been operating a bit more smoothly. So in terms of China, China obviously is quite important for not only for South Africa, but as an economy, just given our resource heavy nature, but also just given the some of the index heavyweights like Naspers and Process that are also quite reliant on China. So we're viewing it quite positively, of course, and we have seen the markets react positively to that, especially shares like Naspers, Process, Richemont, etc., even some of the commodity counters. Just given the potential impact that it might have on those commodity prices, which are likely to be continue to be well supported, just given that China reopening. We're viewing it as positive, and it's positive for SA. We don't invest regionally ourselves. We leave those decisions up to the managers, but we certainly are encouraged by those developments.
Speaking of encouraged, I mean, yesterday we had US CPI data coming out. Are you encouraged by the trend that we're seeing with regards to the US CPI figures?
Yes, so those were some good numbers, kind of in line with expectation, I would say. But what we are seeing is that inflation does seem to be peaking, not only in the US, but in Europe as well. And that certainly is good. I think the read through from that by sort of market commentators and investors as well is that perhaps that leaves scope for the Fed now to at least slow the pace of rate hikes, and maybe at some point during the course of the year or even next year, the door might even be open to some rate cuts. Now, the market might be overly optimistic in expecting rates to come down as quickly as what it went up, certainly. But definitely, you're right. It's great to see that inflation is starting to peak. It just means that the pace of rate hikes will certainly slow, and perhaps we could see some rate cuts towards the end of this year.
On that note, before I let you go, is it too early to tell whether dollar strength is behind us, or can we safely say that it is behind us?
It's difficult to say. I would say that certainly just given the extent of that move and that strengthening in the dollar, which is a counter-cyclical currency, it tends to do well when the rest of the world is sort of slowing down, and we are in that sort of a period. But having said that, there is some level of reversion that does need to take place, and so we have seen some dollar weakness come through, and we're seeing that in a bit of the rand having strengthened from those very oversold levels. It does seem like perhaps that trend has, and that tide has turned, which would certainly be positive for currencies like the rand, like other emerging market currencies. Certainly, it also does affect commodity prices as well, which are priced in dollars. But yes, hopefully that has turned. It would certainly, as I say, be positive for currencies like the rand as well.
That is Reza Hendrickse, a portfolio manager from PPS Investments, talking about the current investment climate. That is it from me. After the break, we'll have SME on Point with Diabo Sitwa, so stay tuned.